We're in Denver, Colorado at EnerCom's 19th Annual Oil and Gas Conference. I'd like to welcome Ben Hulburt, Chairman, President, and CEO of Eclipse Resources. Welcome.
Thank you. Thank you for having me.
Eclipse has 225,000 acres in the Utica and Marcellus. Can you tell us about your assets there?
Sure. Well, we have about 220,000 acres, as you said, in the state of Ohio. About 100,000 of that, just shy of 100,000, is in what we think is the core of the Utica shale play in southeastern Ohio. Our acreage ranges from the wet gas window all the way over to the dry gas areas of the Utica. In addition to that, we have about 26,000 acres in Ohio where we're also drilling the Marcellus shale in an area where the Marcellus produces a fairly high liquid and oil cut along with the natural gas. And then finally, we have about 130,000 acres in the oil window of the Utica shale, much earlier stage, frankly, or riskier drilling at this point. We're more focused on the liquids and drier parts of the Utica shale.
Tell us about the Utica wells you're drilling this year. Tell us about your drilling plans and the results you're targeting.
Sure. So we've drilled wells all the way from Marcellus liquids-rich wells, dry gas Utica wells, all the way, not quite to the oil window of the Utica, but in the liquids areas. Year to date, we've drilled or participated in about 58 gross Utica wells to date. So far, the results, knock on wood, have been quite spectacular. We think it's going to produce some of the best returns in the country. We're targeting individual rates of return in excess of 50%. We've identified about 950 drilling locations across our acreage base so far. Over 90% of those locations are in an area where we think IRRs on wells will be in excess of 50%. We've drilled about 58 wells year to date in the first half. We plan to drill about 100 wells in the second half of the year and are on pace to do that, maybe even running a little ahead of that. Moving forward into next year, we project that pace to about double in 2015.
Could you tell us about your liquidity and balance sheet, how your current drilling plan is funded, and what about funding for future development?
Sure. So we recently completed our initial public offering in June of this year, and we sized that initial public offering to make sure that we could fund our 3-year drilling program, at which point we believe we would go cash flow positive. So we have a very strong balance sheet right now, currently sitting with about $570 million of liquidity, about $490 million of cash, and about $75 million available on our borrowing base. So very strong balance sheet, and we continue to believe we've fully funded that drilling plan until we go cash flow positive. At this point, we think in mid-2016.
Ben, during the second quarter, a number of companies noted that production was hampered by pipeline and processing constraints. How are you matching your drilling and production activities with supply distribution?
Sure. So one of the things we did as we laid out our drilling plan was we generally drilled along where pipelines already existed. So to date, we really haven't been hampered by pipeline takeaway capacity. We've partnered with a company called Blue Racer Midstream on our liquids areas to process the gas and have really married our drilling plan with their development plans. So that's gone very well, and so far we haven't been hampered by our midstream operations. In addition to that, we've secured about 450 million cubic feet a day of firm takeaway capacity, mostly to get our gas out of the Appalachian Basin into other ports of the country where the natural gas pricing is a little stronger. So we feel like we're in very good shape on that front.
In your operating focus, who are the public companies that you're emulating?
Sure. So as we put together Eclipse, our objective was to become a premier Appalachian Basin company. On the order of two companies I've always looked up to as Range and EQT. So I guess if we were going to model ourselves against anybody, it'd probably be those two companies.
What else do you think our viewers should know about Eclipse?
Well, we're a very young company. We project our compounded annual growth rates in production to be over 200% over the next 3 years. So we've got a lot of growth coming, and I think a lot of exciting things to come. And at this point, are running at or ahead of schedule on our drilling plan.
Well, we wish you continued success.
Thank you.
Thank you. I'm Quinn Nguyen for OilAndGas360.com.